Good day everyone, I'm Daisy Puna from BPA-1A and I present this topic, the 5 major accounts from Fundamental Accounting. What is Fundamental Accounting? The Fundamental Accounting of include recording keeping, which is the primary function of accounting. A business must use standard form of storing and retaining information so it can be revised when the need for it arises. True and accurate storage of records is essential for all transaction-related purposes. This is the 5 major accounts. First is asset, liabilities, equity, income, and expenses. What is asset? An asset is resource with economic value that an individual, corporation, or country owns or controls with the expectation that will be provide a future benefit. Assets are reported on a company balance sheet and are bought or created to increase a firm's value or benefit the firm's operations. Liabilities. A company's liabilities are the debits and obligations represented on its balance sheet. They are the opposite of assets. Liabilities detract from a company's total value as they represent debits that we have to be paid over time. Equity. Equity represents the shareholder's stake in the company identified on a company balance sheet. The calculation of equity is company total asset minus its total liabilities, and it's used in several key financial ratios such as ROE. Income. Income is the difference between revenue and the cost or expenses incurred by a business in a particular accounting period. It is also known as the profit of a business. Income leads to an increase in the value of assets in a business. And the last one is expenses. An expenses is accounting is the money spent or cost incurred by a business in their effort or to generate revenues. Essentially, accounts expenses represent the cost of doing business. They are the sum of all activities that hopefully generate a profit. Example of 5 major accounts. Example of asset is cash and cash equivalent, cash receivable, marketable securities, trademark, patient, and the next is example of liabilities, bank debit, mortgage debit, money owed to supplier or account payable, wage owed, taxes owed. Example of income, labor, business profit, tangible asset, intangible asset, capital gain. This is the example of 5 major accounts in the equity. Common stock, preferred stock, retained earning, contributor surplus, additional paid-in capital, and the last one is expenses. Cost of goods sold, sales commission expense, delivery expense, rent expense, salaries expense, and that's all. Thank you for listening to my report, and thank you and God bless all.